coming from a small town from Rajasthan to today being the CEO of HDFC.
A lot of time people ask me, कि आप इतनी छोटी जगह से आए? You came from that small town and you have reached here. How did that happen? And I said, because I was born there, I have reached here.
I was reading, I think somewhere where you said that gold does not create the wealth effect.
From a behavioral perspective, when gold and silver prices go up, you don't feel rich of what you own. You actually feel that, oh my God, my next purchase will be at a higher price.
Talking about markets, sir, there have been some recovery. So what's your view on the markets?
There are two kinds of forecasters in the world. One who don't know, the second who don't know that they don't know. What could be the earnings growth of the corporate India as a whole? Where we are today, maybe what the nominal GDP delivers. I've never seen 1.4 billion as determined to do well as we are now. So of course, either you can get distracted by the headlines from rest of the world, or you can have more self-confidence that this time is ours. We cannot miss this opportunity.
What does money mean for you? Hi Navneet sir, welcome to Power Talks. I think it's such an honor for me to sit down with the person behind the biggest mutual fund house in India. Usually when I do these podcasts, I talk about schemes, what is performing, what is underperforming. But very, rarely I also get to sit down with someone who has been on the forefront of two of the biggest groups in India right now, HDFC and SBI before. So I would love to pick your brains on markets overall, advice that you would have for our investors and our audience, and your personal story. I think that's so inspirational, coming from a small town from Rajasthan to today being the CEO of HDFC. So let's start with that. Let's walk with your early life and how that shaped in your investment philosophy.
Thank you, Navda. It's such a pleasure to be part of your talk. And a lot of time people ask me, कि आप इतनी छोटी जगह से आए? You came from that small town and you have reached here. How did that happen? And I said, because I was born there, I've reached here. Because I was born there, I've reached here. We didn't have like basic electricity 24/7, didn't have like 24/7 tap water, and many of the other challenges. But that teaches you a lot. When you work in constraints, I think then you start allocating your time, allocating your resources far more efficiently. The environment teaches you so much. I moved out for work, so I did my schooling, my graduation, my post-graduation in accounting and business statistics, my chartered accountancy, everything from there.
Oh, okay.
And then I moved out. There was no exam center of CA, so I had to go to Jodhpur and Jaipur to give exams. And yeah, those were the days. You look at the recent cricket team which has won the World Cup, and all the women are so inspiring. Look at the backgrounds of each one of them, coming from a small town in Punjab or Haryana or Northeast or different parts of the country, what they've gone through and what the pride they have brought for the country. I think these stories make you feel very inspired.
Absolutely. And that's what, inspired me, to bring this question, right? I think you talked about living in scarcity, and that sort of develops your mindset towards achieving certain things in life, right? So what triggered you towards coming into capital markets and investing, and how has your relationship with money evolved?
Yeah, of course, I had deep interest in markets. I had deep interest in economy. I was always a commerce student, right from like the middle school to like I did my CA, as I said that. Throughout this period, 80s, 90s, even as a small kid, I got deeply interested in global politics, global markets and all of that. Of course, this was the world where your window to the world was through radio and newspapers. Even an English newspaper will come on second or third day, not on the very next day.
Tell me a little bit about your investing. Like, when did you do your first investment?
I would have been a small kid, like I think 11 or 12. We invested in an IPO. I think some 1,000 rupees or something.
The paper IPO
got listed. The paper. सब कुछ paper ही होता था. Till actually, even when I started working in early 90s, for the longest time we used to fill the transfer deed along with the share certificate, and you put the distinctive number and share certificate number and put a stamp and then send it for transfer. There was nothing like instant. So we come from that world where a share certificate had to be sent for transfer. You wait for weeks, if not months, for it to like come back, and everything was like post. Now everything is so instant. In 1 minute trade is done. So it's a different world.
And on that note, like what's been your portfolio like? Are you a mutual fund investor?
Of course.
And like
all the money here
in
the
mutual
funds. Of course, yeah.
Interest. And what about gold, silver, commodities? Do you
would have maybe, I don't know which fund would have a small allocation, but I would be I mean, not much. Bulk of our money would be like in our equity funds, in our hybrid funds. Some of our fixed income funds, but otherwise, yeah.
Very recently, in last 2 years, like gold, silver have been on the rise. And we also spoke about your portfolio allocation to gold, silver a little bit here and there. I was reading, I think somewhere where you said that gold does not create the wealth effect.
No,
right?
no. Okay, maybe. My point was that from a behavioral perspective, when people make money in the stock market, people make money, let's say, in mutual funds, and they see rising NAV. People have maybe an extra piece of land or a house where prices have gone up manifold. It will reflect in their spending pattern. Even if they have not redeemed and booked profit, they feel rich and they spend more money. Gold and silver is very interesting because maybe for thousands of years, you consider yourself as a perpetual investor. So when gold and silver prices go up, you don't feel rich of what you own. You actually feel that, oh my God, mera agla purchase will be at a higher price. Because you think yourself of a perpetual buyer. Oh, agle saal like mere ko aur zyada price dena hai. So it doesn't give you that feel in India of like feeling richer. कि किसी के पास 1 gram है या 100 grams है या 1 kilo भी सोना होगा ना, even then they don't feel rich and spend money. That okay, now I have like made so much, because they think that my next purchase will be higher. You know, it's very interesting. I tell people, I hope one day people think about SIP in exactly the same manner. People, like when the prices go up, they feel that, oh my God, my next SIP will get me lower number of units. It's other way around today. You also said कि यार पहली बार in last 1 year लोगों का कम पैसा बना है. You should feel happy you are getting more units. The same, but the gold, silver, they apply a different yardstick.
Right. No, I think I agree, and I think
when prices go down on Dhanteras, they feel good.
Yes.
If prices are higher, they don't feel good. The same thing, why don't they apply on their mutual fund statement?
True. I agree, and I think that because buying gold is always there, right? You have to or you will, right? I remember I'm pretty sure my wedding jewelry would be much more valued, but now I'm always thinking, oh, my next one will be very expensive.
Next one will be expensive. But in the stock market, people don't feel like that.
That's true.
Right?
But that's I think the good part about gold.
Like, you know what, higher whatever XIRR or whatever the returns that you see on the fund side, you want to see that higher and higher number, even if you are an SIP investor. If you are an SIP investor, you should feel happy कि अच्छा यार बाजार नीचे आ गया तो मेरी यूनिट्स ज़्यादा आएंगी.
Right. And I think that's the beauty of gold कि वो रहता है and just quietly compounds. You don't realize because you don't really cash it out. I think इसलिए नहीं लगता. No, on that note, you know, what would be, sir, your advice for someone who is building their portfolio primarily into equities for a 30-year-old out there? How should they build, you know, in terms of allocation to large, mid, small? Also, there's a lot of jargon out there, right? So how do you simplify it for this average retail investor?
Yeah. Where my money is, so bulk of that would be in funds like, let's say, flexi cap, multi cap, those kind of funds where I get
more equitable distribution
across market cap, and I leave it to my fund managers where they deploy. Of course, I have in large cap, I have in my small cap fund and all of that. But yeah, good part of the money, I think some of these plain vanilla simple funds take care of everything.
Yeah, no, true. I think flexi gives you that also advantage to sort of move around and you know, so keeps. I think fund manager knows the best.
In our flexi cap, we had like larger allocation. I mean, relatively like many more small caps, let's say 2-3 years back. Last year when valuations were on the higher side, the fund manager shifted from some of those small caps to some of the larger caps.
It was much
At
higher
any point in time when there is, let's say, a different opportunity, I mean, the fund manager has the flexibility to allocate.
Yeah, no, makes sense. So you manage money for 1.5 crore people, right? What are some of the mistakes that you see them doing?
The real asset that you have is the time on your side, not the money that you are investing. Now, thanks to people like you today, more and more people in their 20s and in their 30s are getting to know this much earlier. Biggest mistake, I would say, that starting a little late. But I mean, as who said that best time to plant a tree was 20 years back. The next best time is today.
Yes.
So at least start today, because you still have lot of time. Investors should be conscious of. One is the peer pressure. Lot of times we do things because there is a peer pressure. You are in college cafeteria or where people are discussing about crypto, or you are in a corporate campus and people are talking about the hottest stock or an IPO. Have you invested that? इतना पैसा बन गया. वो peer pressure नहीं होना चाहिए. I think you should be looking at like your portfolio, your life goals rather than coming under that. The second is the media noise. It constantly, and these days with the Telegram and WhatsApp and you know the X and whatnot, you get bombarded with like so much of information, and it gives you an illusion of control. It gives you an illusion that you know a lot more, which is not the case. I keep quoting this, that data is not information, information is not knowledge, knowledge is not understanding, understanding is not wisdom. पैसा wisdom से बनता है, wealth creation wisdom से होता है. That wisdom, I have simplified it like sound investment plus time plus patience. तीन चीज का ध्यान रखो. सही निवेश, लंबा समय, and Sayyam, which is like patience. These three things are most important. Third is, so I said one is like peer pressure, second is the media noise, and third is the cognitive biases. We have some inherent biases, like again, to maybe oversimplify it, like we get excessively greedy when markets are exuberant, we get excessively fearful when markets are going down. I think it's not the timing, but the time in the market which is more important. I think simple things that we keep in mind.
So when you started your career with Aditya Birla, right, you were in fixed income. So does that sort of translate into your investment philosophy, being more cross asset exposure?
Yeah, that's interesting. So I started as like a market maker and bonds and debentures and all of that, and over a period of time I managed fixed income funds, hybrid funds and all that. So in fixed income, interesting part is that you spend a lot of time on understanding the macro and take a view on the interest rates. And for that, you have to study monetary policy, fiscal policy, global environment a lot deeper. So there is a like overall macro understanding that gets built over a period of time, and I really enjoyed it, and I still like track macro as much as I can. So it was an advantage. Also the fixed income guys, because the upside is capped, right? You only get your coupon and maybe a little bit of capital gain, but the downside is like very large if you are investing in credit. Maybe I think you become a better risk manager. You're always looking at risk, you're always looking at like protecting your capital, you are always looking at preservation of capital, also a little differently than maybe equity. Equity guys focus a lot more on the upside, the downside protection comes naturally to fixed income investors. Also a competitive streak that in fixed income, the fund managers are fighting for like every 1 basis point of alpha, and you find like many sources of generating alpha. So I think that makes us like more competitive by nature.
A lot of CEOs that we speak to have started or somewhere have...
Some of us, and we are all like good friends.
Yes, they have started in fixed income, that's
fund
true.
Houses competing with each other but collaborating at the industry level. Also that in fixed income, because like regulations evolved over a period of time, markets evolved over a period of time, we were always very deeply engaged with regulator. And something that in my life I've always enjoyed is like, you know, engaging with policymakers, engaging with the regulators. And you always think like how differently they think, and you appreciate their viewpoint and be a participant, active participant in shaping policies and shaping regulation in India. And that's a part I think several of us on the fixed income side have been very, very lucky.
Talking about markets, sir, right now there have been some recovery. So what's your view on the markets? Are markets at a fair valuation now, or do you think we'll have maybe more corrections?
There is a famous quote of one of the economists that there are two kinds of forecasters in the world. One who don't know, the second who don't know that they don't know. So really it's very difficult to predict markets in the short run. There are all kinds of risks. Anything may happen in US, anything may happen in any other part of the world, anything may happen in markets. But the way to look at it is, I mean, if you take a slightly longer term view, then I think overall India's macro has been in a good shape. You look at RBI policy, they've been cutting interest rate, they've been releasing liquidity, they've been trying to nudge the credit growth higher. You look at all the measures that have been taken by the government, right from the cut in personal income tax to cut in the GST to several other reforms that you have been reading about it. Our overall, I think the macro environment has been very positive. Balance sheets are in a very good shape. You look at corporate balance sheet, you look at financial sector balance sheet. So India's overall macro environment has been good. Corporate profits, they grew very well for 3 years. Then this year was the year of consolidation, low single digit growth. Now this quarter, first time you have seen after a couple of quarters, a reasonably better growth than last couple of quarters, and my expectation is that this is probably the beginning of another profit cycle. Okay. You are seeing more positive commentaries from the corporate sector, and over the next couple of years, if overall profits grow in line with nominal GDP growth, and nominal GDP growth improves from here on because inflation starts inching up, then I think over the next couple of years one can expect decent returns. But of course, what happened there were 2-3 year period where people were making like 30% per annum in small cap, mid cap funds, or 25% per annum in flexi cap. And people were extrapolating those returns. That should not be the case. Right. Your return expectations has to be.
Yeah, so what should be the return expectation?
So in equity market, returns come from 3 sources. Number 1 is earnings growth. Stock price is nothing but the slave of the underlying earning of the companies. Second is dividend that companies pay. Third is the change in the PE, change in the valuation. Now, what could be the earnings growth of the corporate India as a whole? Where we are today, maybe what the nominal GDP delivers. And over a period, of course, last few quarters, the nominal GDP growth has also been low. Real GDP growth has been higher, inflation is low. But if let's say India grows at 7%, you add 4% inflation, 11% or so nominal GDP growth, and few corporates, few sectors do better than that, that should be the right return expectations. But also compare with the another thing, that if fixed income yields are like 6.5%, then couple of 100 basis point higher than that is a good return to expect from equity.
So for large cap, I understand like a bulk of these profits come from large cap and pegging it with where the GDP growth is. But what about mid and small cap? Do you think we should expect more alpha in the coming years from mid and small cap?
It's an interesting thing. If you look at the percentage growth in profit of the larger companies versus the smaller or the mid-sized companies, percentage of the top 50 companies or so I was reading, I think has been kind of like coming off a bit. I mean, as a percent, the total contribution to the profit growth, which means that several of the smaller and mid-sized companies have shown like a better growth in profits. And I've been saying this for last several years that with so many changes in the world, nimbleness and agility is equally important, if not more, than size and stability. So while large caps have relatively, I would say, valuations relatively in line with the longer term range, mid and small caps are trading at a premium, and some of that premium could be because this is a new world with bigger opportunities, a lot of transformations, the way AI is changing, the way policies are changing, the way consumer behavior is changing, and that nimbleness and agility gives them an ability to do things that some of their larger peers may not be able to do.
Right, and that's why I'm curious as an investor, right, that do we see large cap will primarily be in line with the 10-12, mid-small is where we should probably, for a long-term person, right, I have a 20-year horizon.
You know what, that in mid and small cap there's a large, see the large cap which have become large cap, they have a history behind that, right, I mean they've delivered that performance for a longer period of time. There is size, there is stability and all of that. You get that comfort. In the small cap size, the universe is very large, but for every one success, large success that you have within that universe, there are like many who are not able to make it. And you need like a good stock picker, a good fund manager to identify those opportunities. I think it's important to, I would say that look at something like a flexi cap fund where fund manager has an ability to allocate across market cap, or a multi-cap where allocation go to all three, large cap, mid cap and small caps.
Okay, got it. And small cap particularly, I find it very fascinating. Right? I mean, I am also in my early 30s, so can sort of absorb the volatility. In the last 1 year, right, I think while large and mid have recovered, but small cap haven't so far. What's your view on small cap in general? Like, what do the next 3-5 years look like?
I think if I go back a year and a half back, most of my fund managers used to say this, I used to say this, that the valuation premium in small caps, part of the market, it got excessive. There were like a lot of stocks where it was about narrative and not the numbers. The prices were running ahead of the fundamentals. Some of that froth has got cleared now. Several of those stocks have corrected. One of the advantage for the fund manager in small cap is the universe is very large and it's expanding. There are so many newer companies are approaching market for listing. So the overall universe is expanding, and as a fund manager you need to identify 30, 50, 60 stocks for your portfolio. And because the universe is very large, a good fund manager with good ability on the stock selection, if you are backed by solid research, then there is always good opportunity to generate alpha.
Right, right. And because you spoke about stock picking, right, and you have been, sort of actively investing, in your last stint at SBI, right? I think I read somewhere you mentioned about commissions and omissions, and you always say that commissions is always more dangerous.
Error of commission versus error of omission.
Yeah. And, picking the wrong stock will be more costly than, missing out on the stock.
Yeah.
So have you, walk us through one maybe miss that you did? And if you're okay sharing.
So there are two kinds of errors you can make, right? I mean, there are many errors you can make, but you can put them in like different baskets. So one is error of commission and error of omission. Error of omission is you think you are not sure about whether this company, this business will do well, and whether this company will deliver. But it ends up delivering very well and the stock goes up. That's an error of omission. You missed out. Error of commission is you got convinced about something, you bought, and then a company didn't deliver, or management disappointed, or valuations came off. Our endeavor at HDFC AMC has been to reduce the error of commission. Of course, we are relative investors. We have to look at the benchmark, have to be aware of the benchmark, and you cannot really miss large opportunities. But at the same time, I think your bigger control is on what you are buying. And I think if you keep applying that filter, that when you are buying something, when you are entering into a position, you keep a larger and larger margin of safety, that I think keeps you in good stead over a long period of time.
Interesting. Is there some framework that you apply that helps?
No, but if I told you that several of our funds have got a very long-term track record. You can go back 30 years and you can see that our fund managers, deep credit to them and to our team, that in 99, 2000, when the whole world was enamored by the TMT, telecom, media, technology, and no price is high, stocks were trading at 100, 200 PE, they underperformed for over a year and a half. Finally, those stocks came off. And for a couple of quarters, it would have looked like, yaar, bahut bada miss to nahi kar rahe hain. But they had the conviction. 2007-8 was very similar. Anything to do with capital goods, engineering, construction, real estate. I mean, no price was high. But then our fund managers took a different view that time, underperformed for a few months, few quarters. Finally, the conviction paid off. Recently, a few years back, some of the stocks in defense, some of the stocks in public sector, some of the stocks in financials and all that, for a few quarters, market ignored the value. Finally, the stance got vindicated. And on the other side, there were stocks where people were saying, no, PE is high. These are quality stocks and you can pay any price. Look at them. Last 5 years, several of them have not delivered.
Right.
So that discipline of what you are buying,
Cutting
what
out noise.
valuation you are paying, is very, very important.
Yeah, no, fair. And I'll just use example of FlexiCap. I'm also the investor, so I was just going through the fact sheet. I was also looking at, and this is a trend I see across multiple fund houses, the overweight on financials. And you also recently have some underweights. I'll talk about that as well. But what is that about the sector that a lot of people are bullish on it?
No, it's a large sector. If you look at the index composition, whether you look at Sensex or Nifty or the NSE, BSE 100, 200, 500, financials is a large part of every index. India, we are at very early stage of financialization of savings. We are at very early stage in terms of the credit growth. The overall, I mean, people just opened their bank accounts 10, 11 years back, right? A large part of the population didn't even have a bank account. Now they've got the bank account, the economy is getting formalized. So obviously there are bigger opportunities on credit growth, on deeper penetration of financial services, and all spheres within financial services have been growing, and they are like a proxy to the overall economy. But we have like stocks across many other sectors. But it's just that it's a large part of the index.
Okay. I mean, what I was comparing it to was, say, the category average, right? And you were slightly overweight on that. So is there something particular in financial sector that you're bullish on?
I always say, so how do you make money in equity funds? How do you generate alpha? You do market timing, you do sector allocation, and you do stock selection. Three things are done by a fund manager. Market timing is, अरे market ऊपर लगता है, ये हो जाएगा macro, and then I keep like less cash or higher cash. We don't do that much.
Okay.
The second is a sector allocation. Okay, financials versus IT versus healthcare versus that. We don't do that much. It's a risk overlay कि बहुत ज़्यादा overweight या बहुत ज़्यादा underweight नहीं हो. And that is also like what we like on a bottom-up basis. So first is market timing, sector is sector allocation. Third is stock selection. Is like really understanding a company, understanding a management, understanding valuation, doing deeper work there. Our bigger focus as a fund house is on that.
Okay.
Just get that thesis right. And then bet on that. Now several times when you look at कि आप ये sector पर overweight है, underweight है, this is basically a reflection of what we like on a bottom-up basis. So maybe you meet couple of banks, you meet couple of NBFCs, you meet couple of, let's say, other players in the capital markets or insurance, so on and so forth. You ended up liking several of them relative to some of the other companies in various businesses. You own them, and वो ऐसा लगेगा आप financials पर overweight हो, but it's not, may not be a top-down call कि financials में overweight जाना है.
Okay, so it's more like a bottom-up stock selection that sort of translates into.
And that has kept us in good stead over 30 years of performance. If you see, a huge focus on getting that research call, getting that conviction, getting that deep understanding of businesses and management and valuation right.
Right. No, I think definitely makes sense. And as we get into the stock selection and overall schemes in HDFC Fund House, right? I think a bunch of them are doing well. We spoke about the principles that you use just in the bottom-up framework, right? We see that you sort of follow a lot of buy and hold strategy. Like, what's your investing style, and is that something that's more common across all the schemes, or there's maybe different for a focused fund versus a more diverse fund?
So each fund, of course, depending on the offer document, depending on the internal templates, etc., would be run differently. But some of the broader, I would say, underlying theme. One is that we have a long-term orientation. That we look at delivering returns on a consistent basis. Consistent doesn't mean every quarter or every month. Consistent meaning over a cycle. We look at that from a performance basis. We are fundamental research based. We don't play momentum in the market. If you look at turnover ratio of all our funds, that would be relatively on the lower side. Look at like our mid cap fund, our small cap fund, most of our funds, our turnover ratio would be like much lower, because our biggest focus is on buying a good business run by a good management, available at reasonable valuation. For us, that margin of safety is very important, and we focus the most on that rather than keep trying to like play the market, because over a long period, what we are telling investors, मैंने पहले क्या बोला आपको, it's the time and not the timing that matters. What is true for them in a way is also true for us, right?
Fair.
That you compound money over a period of time, and this is like, if somebody asks me like secret sauce क्या है आपका, इतना अच्छा performance है for such a long period of time, HDFC, AMC, तो हमारा एक time arbitrage है, एक research arbitrage है. Time arbitrage is we think longer than most of the other players in the market who are looking at आज क्या news आ गई, या ये हफ्ते क्या होने वाला है, कल RBI क्या करने वाला है, उसके जगह पे हम सोचते हैं ये बिजनेस क्या करने वाला है लॉन्ग रन में, ये मैनेजमेंट क्या करने वाला है. नंबर वन, टाइम आर्बिट्राज. सेकंड इज अ रिसर्च आर्बिट्राज, दैट वी डू मच डीपर वर्क दैन the other people in the market, and these two gives us a lot of edge over other players. And that's why the alpha in so many funds over 10, 15, 20, 30 years.
India, in its individual sense, yes, there are a lot of good macro indicators on the rise. But in terms of just geopolitical instability that is out there in the world, what do you think is the impact of that instability on Indian economy, right? I mean, the last 1 year has also been sort of I think a replication of that, and given people are now moving to gold and more other assets for hedging. What's your view on that?
Now look at the quarterly GDP data that we have got. 6 months back, when the tariffs got announced by the United States, some of the other geopolitical uncertainty in the world, one would have thought that अभी तो इंडिया की इकोनॉमी अच्छी नहीं करेगी, but we have been doing well. There are structural factors which have been driving growth in India. I think all the policy reforms that we have done. We are a young country. We have the demographics on our side. The digitalization has been an exceptional story of India. Over the last 10 years, we have transformed from the most data poor society to the most data rich society in the world. And now AI and all, where world is investing hundreds of billions of dollars, but we have the potential to be the use case capital of the world. In every technological transformation, you can go back last few decades, you can see that India has been a beneficiary because we deploy that technology very well. The way we have built our digital public infrastructure, the way we did come out with the biometric card, the whole Jan Dhan Yojana, the whole mobility that we have got. I think India has those structural advantages. When people ask me about all the macro and what makes you so positive on India, one of the things I always say is the rising power of women. I come from a small town. I've lived there. I've grown there. I've seen real India, real Bharat, and I travel across the country. Go to hinterland, meet a small girl going to a school or a college, see the ambition in her eyes, see the aspiration in her eyes. That will change the view about India in you. You can see that across spheres. You look at like in the creative world, you look at in the sports world, you look at in like profession, you look at like pilots, you go anywhere. And that makes me really positive on India. This is such an underestimated, extremely powerful force currently in India, which nobody talks about. The biggest difference is relative to my childhood and now, I think the biggest difference is I've never seen 1.4 billion as determined to do well as we are now. So of course, either you can get distracted by the headlines from rest of the world, or you can have more self-confidence that this time is ours. We cannot miss this opportunity.
Let's look at the next decade, right? What are some of the sectors that you feel will be, the India's growth story?
What we see is like the managements who got hunger, the managements who believe in like creating value for every stakeholders, the management who are seeing the future and investing it today, delivering the right kind of value. And I can see that like the whole, the range of entrepreneurs in India who are looking at several opportunities that that have opened up. And I think the biggest India story is that it's not like, of course I can talk about like many sectors. We talked about financial services. I can talk about how the formalization of economy is leading to opportunities in certain sectors, how the whole resurgence of manufacturing in India will open up opportunities, how the whole changes in the consumer economy. I use 3C: caring, convenience and compounding. These are like three trends I can see where people are putting their money as consumers, and what are the opportunities that can emerge from them. So there are like many across sectors, but I think the real trick is identifying good company, good management at the reasonable valuation, and that's why you need fund managers like us.
Absolutely, absolutely. I think we leave the stock picking to the best, but caring, convenience and compounding are the three things that I will take away
from a consumer economy.
Yes.
The more I deeper, I think that where are people spending, or they are going to spend more, and I think caring about themselves. And so we talk about like the young economy. The India is like demographics on our side, but we'll also have a lot of people in 60s, 70s, 80s. Over the next several years, several decades, so they'll be spending a lot more on their
healthcare will, I think,
the physical and mental well-being, a lot of like preventive healthcare or other things. they will be and entertaining themselves. The second is the convenience. Everybody wants things to be very convenient. The third thing is the compounding. Everybody wants their money to do more than what it has done historically for their parents or their grandparents. So some of these are like trends that I see in consumer economy.
Great. I think last question, and I would love to ask this, especially to you. What does money mean for you? You handle lakhs of crores of AUM for other people. What is money for you?
Money gives you a sense of like freedom. Money gives you that sense of security. But beyond a point, I think it's something different. And there is a Kabir ka doha which is like, साईं इतना दीजिए जामे कुटुंब समाए, साईं इतना दीजिए जामे कुटुंब समाए, ना मैं भूखा रहूं ना साधु भूखा जाए. I mean, if you have like money which gives you a sense of security, which gives you like flexibility, where you feel good, and you feel like sadhu bhuka jai, meaning like that anybody that I can be of help to, because money is also a means to like doing good. I mean, everything that we make comes from society, from the environment, from the universe. Ultimately, I mean, the universe owns it, and it feels good.
No, I think perfect note to end this conversation. So thank you so much for sharing all of this. I thoroughly enjoyed our conversation today.
Thank you so much.